Hey guys, Riley Moore here again. This is another vlog with all the craziness going on with Rideshare and Uber over the past couple of weeks. We have a lot to talk about, with the exiting of Travis from Uber as their CEO. They've lost board members. They still don't have a COO. They still don't have a CFO. It's crazy. And they're running the company by like a 17-person committee. And that doesn't work. It is so hard to get 17 people to agree to anything. When was the last time you tried to have 17 people come over for lunch or something? It's really hard to get 17 people to do anything together. So I think that Uber's in pretty scary shape right now in terms of their ability to effectively navigate and execute strategy, but we're just going to have to see what happens. And honestly, too, I mean, Travis could do this whole Steve Jobs thing, right, where Steve Jobs leaves Apple, the board kind of kicks him out, and he leaves, and the company tanks, and their financials are, doing really poorly, and the investors get scared. And Uber's got a ton of money. I mean, they've had like $7 or $8 billion invested into them, so they have a ton of money in them, and they have to, those investors have to get liquidity out of that. And it might be the same thing that Apple did, where they bring back the original founder slash CEO and try to recover the situation. But with all that insanity going on, and all that news and all that gossip and everything that we're tweeting about and writing about on our Facebook and on our Twitter and on our website, we still have to stay focused on drivers and rideshare delivery guys and what they need to do. And a big part that we found a lot of people have a tremendous amount of confusion with is quarterly taxes, which are also called estimated taxes. So if you've heard of estimated taxes but not quarterly, or quarterly but not estimated, those are really the same thing, so don't get confused by the semantics. They're the same thing. If you're a rideshare or a delivery driver, you probably already know that you're an independent contractor, and this means that according to the IRS, you're a small business. So you need to be prepared to pay business taxes and keep proper accounting records. A regular part of business taxes is quarterly taxes. Pretty much everybody who runs a business, whether they're an independent contractor or an LLC or a partnership or whatnot, we all pay quarterly taxes. It's the way that it works. And what are quarterly taxes? They're just like the regular taxes that you pay, except when you're an employee and you get a W-2, usually you pay all your taxes at one time. But if you're a business, you pay them actually 4 times per year. So instead of paying in one lump sum, you pay 4 times per year. And quarterly taxes, they apply to both the federal and the state level. So the business tax rate for the state level, it varies year to year. So make sure that you know yours, because you might be overpaying or you might be underpaying if you're using the wrong state tax rate. So just Google that. It's easy to find. Google, like we did, California business tax rate, and you'll be able to find that number. One big question is, when are they due? Quarterly taxes, like the name suggests, they're due every 3 months. They're due on April 18th, June 15th, September 15th, and January 16th. So you have 4 payments for 1 year's worth of taxes, and you basically pay your taxes every 3 months instead of once a year. So it's a super simple concept. Who pays quarterly taxes? The simple answer, like we've said, is independent contractors and businesses. They must pay quarterly taxes. Now, we have $1,000 worth of deductions. You need to pay quarterly taxes. If you had $2,000 due in taxes this year, projected, and you had $1,801 in deductions, you would not have to pay quarterly taxes, because you have more deductions, 90% to the 90% level, than you do an actual tax liability. The second thing, so if that's true, you need to pay quarterly taxes. And if this is true, you need to pay quarterly taxes. So it's one or the other. It's not both. It could be both, though. So one or the other is enough, though. Your business is projected to owe $1,000 in taxes this year. That's 2017. And your total tax deductions are less than your business tax bill you paid last year. So that means this year you're going to owe $1,000 in taxes, And all the deductions that you have calculated and estimated for this year are not as much as you paid in taxes last year. So let's say this year you think I'm going to owe $2,000 in taxes. And last year you had $2,000 worth of deductions. That means you don't have to pay quarterly taxes. If that's a little bit confusing, then what you can do is you can look at the blog post. We're going to put a link below, or go to our website, easydriver.com, and read it yourself. It'll probably become more clear if you read it. Some people are auditory learners, some people learn by reading. So it just depends on how you want to digest the information. Then the next big question is, how do I calculate quarterly taxes? There are two ways to do this. I'm not going to go into great detail about the math here. It's really pretty simple. It's some addition, some subtraction, and some multiplication. But there are two approximation methods. The first one works good if your income is stable year over year. The second one is better if your income is unstable. The second one is also better if you've never done this before and you want to have a better understanding of how to calculate both the state and the federal level taxes. Use approximation method too. Basically, the idea behind both of them is that you project your total tax due for this year, you divide it by 4, and you send the IRS a check for that amount every 3 months. So it's that simple. And then we have some math that'll speak to how you do that, but we're not going to go through that math because without being able to have like a whiteboard or draw it out or something, it would be hard for people to follow the equations. But it's easy, so go to the blog post and look at the formulas there. So that's it. You need to understand what your taxes are going to be this year. You need to do that by projecting them. You divide that number by 4, and then you send that amount of money to the IRS, and you make sure that you have a really good projection of what your deductions are this year too, because that's a part of the math. A lot of people ignore quarterly taxes. A lot of people ignore estimated taxes. They just don't do it. They pay them once a year. We hear a lot of stories about people doing that and not getting in any trouble with the IRS, but that's a risk. Honestly, that's a risk, because the IRS will certainly, if they find out and they notice that you're not doing what you're supposed to do, they will probably fine you. The fine is somewhere between 6 and 8%. Usually it's between 6 and 8%. It can be more in different situations. There's all kinds of ways that it can change, but usually between 6 and 8% for a penalty associated with your tax bill if you don't pay your quarterly taxes. Even if you pay the full amount at the end of the year, you're still subject to the penalty. So if you're going to pay the money, pay it in smaller pieces. It's always easy to pay a bill broken up than it is to pay it all at once. So we think quarterly taxes make a lot of sense. We hope that you do your quarterly taxes. And if this feels confusing or difficult or like a chore that you don't really want to do yourself, you can get a free trial of our software. It's called Easy Driver. It's an app, and basically it does the math that we're laying out for you in the blog post. So it's an automated way to do something that you would have to do with pen and paper or Excel. But we're not, we never, ever, ever in any of our blog posts, we never hide something, right? Oh yeah, we left out this one critical step to the equation. We never do that. We tell you exactly how to do it correctly. So if you want to download the app, you can do it, or you can use the way that we explain in the blog post, and that will be just as good, except it will take longer. You have to keep your own records. You have to do the math yourself. We just provide a way to remove the stress from the situation by automating it. So just keep in mind, if you're driving for Uber, Lyft, Washio, Grubhub, any of these types of companies, you're an independent contractor and you have to pay quarterly taxes. So just keep track of those deductions. And if you have any questions, comment below. We will get back to you. You can hit us up on Twitter. You can comment on the blog post on our website. We watch that stuff pretty closely so that when you have questions, we can respond to them quickly. Anyways, thanks guys. Have a good day.